Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we're going to be discussing market confirmation. This is one of the most important elements of from a technical analyst's perspective. It's one of the most important elements you have to learn to follow. This is why investors and traders will pay so much attention to what the markets are doing from day to day, because they need to trade with the markets rather than against it. That's what market confirmation means. You may find an individual company that is telling you that you should be selling. However, if it's telling you to short or sell a particular stock while the market is telling you to go long, you probably don't want to make that trade, and we'll pass up on those opportunities again and again, simply because we want situations where both the individual company is telling us to go long and the overall market is telling us to go long, or vice versa, where the individual company is telling us to go short and the market is also telling us to go short. When you have both those things together, you have a stronger odds of success there. And here's the reason why. 90% of stocks will follow the overall market, higher or lower, depending on which direction it's going. So you want to stack those odds in favor of your trade, right? Otherwise, you're going to be trying to find that small 10% of stocks that will go against the trend. That's not going to be stacking the odds in favor of you. So what we're going to do here is we're going to look at the market, and we're going to find a situation, I already know of one, where you had a stock that was telling you to sell, and then you had the market that was telling you to go long, and you can see what happens. And even in cases where you won't see, for example, the market goes up, but a stock is so poorly traded at the time, it won't fall, but it will just stay flat because it's being supported by the market sentiment. So you need to actually learn to read the markets before you go looking for finding an individual company you want to trade. Know the direction of your market, and then try to go find a stock that will match that directional move. Okay, as I said, this is the S&P 500 or the SPX, and what you see here during this time period, 18th, 19th, 20th, is you were getting buy signals. You had a buy signal here, which you've marked with the blue arrow. You had another one a couple days later, and at the same time you were pulled down below the negative 80 line on the Williams %R oscillator. Basically, whenever your oscillator is up above that negative 20 line, it's telling you that you might be getting toppy. You should be looking for a potential pullback. Whenever you're getting down here below the negative 80 line, it's telling you the exact opposite. You've sold off pretty good. You should be looking for a move, a bounce to the upside, something like that. So in this case here, we were being told to look for a bounce here. We were getting some buy reversal signals. You had inverted hammer formations telling you this is likely to bounce to the upside, and that's exactly what happened. During this exact same time period, however, one of our individual alerts that we issued on the website came out as a sell signal. Now, I don't personally determine which stocks are going to be issued alerts on. I don't have my opinion in them in any way, shape, or form. I run a scan, I pull up the data, I take one of them, and I put it on the website. It's then my job to look at the market and say, okay, the market says it's going up, so I will only go look for stocks that are on the bull side, alerts that are being issued from the bull's perspective. If the market is saying it's going to go down, then I will only look at stocks that are, or alerts that are from a bear's perspective. But I have to determine that based on what I first see in the market. Okay, here we are looking at an individual company, AGL Resources Inc., and you'll notice that on the 19th you had a sell signal. And this is actually quite logical. Everything on this chart looks right for a sell move. You had a move back here that jumped up to 41.51 and ricocheted off of that, finding resistance, and then bouncing up to that level again at 41.51, bouncing back off that price, finding again resistance, jumps up to 41.42, sells off again, same resistance, bounce up there again, hits the same price, you get the same shooting star sell signal that you had back here and here, though I've marked them up and you can't see them just yet, but they're there. And then you had the sellings begin right here. You also had an overbought condition here, here, here. Everything looked identical to another sell-off where you bounce up, hit that line, you're going to come down again. However, the following day you get a move higher, breaking out of resistance and turning resistance into support, and now the price activity is coming down, touching that support, bouncing off of it, and just starting to move in a bullish pattern. What happened? Well, in short, the rising tide of the market lifted all boats, and that is why you have to learn to pay attention to the overall markets. If you know your market direction, then you know how to work with that strength. If you ignore that market direction, you're going to get nailed repeatedly. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.